Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Monday, December 12th, and we are gearing up for what is expected to be one of the more volatile weeks that we've experienced in quite some time, probably at least in a month since the last um, CPI report and FOMC meeting. So the big news this week is Tuesday, December 13th, tomorrow at 8:30 a.m. Eastern, consumer price index as well as core CPI both report at the same time. Uh, the expectations are for it to come down year over year. I know that the monthly looks a little bit weird because core CPI is expected to increase from 0.3% to 0.4% month over month. But if we look at year on year, previous 7.8% for regular CPI, it's expected to come in at 7.3%. And then core CPI, which is CPI minus food and energy costs, is expected to come in at 6.1%, down from 6.3% year on year. So the expectations are inflation is coming down, and obviously that's what's going to drive the volatility, whether or not reality meets expectations. Then, of course, on Wednesday, we have the federal funds rate announcement, which is expected to be 50 basis points or 0.5%. And then Jerome Powell speaks 30 minutes after that in relation to the rate hike and outlook moving forward. So both of these are massive. If you're in the Trade the Chain community, I posted a chart earlier showing what happened during previous reports. And last time inflation was a beat, Ethereum and Bitcoin both rose more than 10% in a 3-hour span following that report. So if inflation is lower than expected, it will drive some serious volatility, likely upwards. And of course, if inflation's higher than expected, it will drive volatility downwards. Then if it's no higher or lower than expected, if it's completely neutral based on expectations, then I would expect, massive volatility in both directions, with price eventually sitting, where it was prior to the print. But inflation staying higher would probably end up being bearish in the long run. It would just drive some massive wicks in either direction. So looking directly at Bitcoin and Ethereum sentiment, Bitcoin daily sentiment dropped pretty heavy over the weekend, recovering as we speak right now. Hourly sentiment quite positive this morning. And Ethereum daily sentiment still quite bearish. Hourly sentiment looking a little bit better, but will that maintain? So we have, a little bit higher than average tweet volume. Trading volumes are still down, which will indicate likely more volatility given there's less liquidity in the markets. And then Bitcoin has much less tweet volume and about the same decrease in trading volume as Ethereum. So not looking extremely positive and from a long-term perspective, but if this daily sentiment number can end up getting back above or at least close to 50, then we definitely will still have a chance at moving higher, in my opinion. So what's, the real driver of risk right now? Of course, that's the dollar. The dollar is more or less unchanged since we spoke last week. I mean, we spoke a week ago and it was down here. So we've been sitting in this, same little dollar range for better part of a week. We're beneath the range that I had outlined, as well as beneath the 200-day moving average. We are at the RSI trend. Typically after kind of 3 bonks, it will have a good chance of lifting higher. And of course, if the RSI trend breaks, typically so does DXY. So that's definitely a worry for risk, but of course it could be rejected. There is no perfection in markets. And if it does get rejected, then we would expect price to probably move back down to that 103.5 area. And of course, if it does break higher, it needs to get above the 200-day moving average, which is going to be about 106 by the time it gets there, and flip that into support. So pretty, very difficult position if you are trying to go long or short risk, because DXY is very much in a position where it can go both ways. And of course, we have the big data coming tomorrow. So that'll obviously be the catalyst. Looking at equities, a bit of a strong move as compared to how we closed last week. This is where we ended markets. And of course, we had a bit of a swing failure pattern lower last night into the morning. Big doji down very early this morning. I'm not entirely sure what that was about. That was about 6 a.m. This morning. Actually, I'm sorry, 5 a.m. Eastern time this morning. And now we're stalling a bit right where resistance was last Wednesday. So the expectations, I think many people would like this to at least tag the equal highs, that we met on Friday before getting absolutely murdered back down before the end of the close. But we do have this RSI resistance right here, and I think it's going to be a little bit far-fetched for equities to really push higher immediately. So best case scenario is moves back down, meets the VWAP right around where the 50-day moving average will be, and then ends up moving higher back to the top of the channel. And hopefully this would all take place before CPI is released at 8:30 a.m. tomorrow. So if you look at it in terms of the entire trading day, there is less than there's about 18 hours left until CPI reports tomorrow morning. So not a whole lot of time in the grand scheme of things. And I would not, recommend positioning too heavy. Maybe you want to position both directions, like we've discussed before, and then exit that trade upon the release of the data, or potentially play both directions. If you think the data is going to be positive and Jerome Powell is going to be hawkish, then you have a long and a shorts, and you close the long. Reduce the shorts and then get back into the short on the long. Of course, it's a very difficult trade to make. That's why we express, having extreme caution in this area. But many people who do place trades in opposing directions, if you get the timing right, you can maximize trade value without losing out on too much capital at the end of the day. But as we continue to look at equities, we basically got what appears to be kind of a symmetrical triangle forming in the RSI. And I would probably expect this to end up ping-ponging around until tomorrow morning before we have some serious volatility. So my expectation for equities is drop back down, maybe previous daily close, and then pop higher, or we survive right around here where the 50-day moving average and VWAP is, and then pop higher really quickly before we end up getting crushed by equities. And of course, there's no guarantee this level holds at all, so we could end up just getting crushed back down right where we are right now. So I'm not feeling very bullish. Sentiment is low. CPI should come in good, but of course we have a rate hike following that. So I think the volatility going into CPI would probably be, neutral to bullish in expectation. And then we have a quick pop, and then we end up, cascading down. But your guess is really as good as mine at this point. This is really, make or break in terms of wallets. And if you do not want your wallet to be broken, I think there's equal risk on the make and the break side, and sometimes it's best to just let the initial volatility wash out for the first half hour of CPI, and then get into the trade whenever Jerome Powell speaks. You're probably safer doing that unless you wanted to take a multi-directional bet. So looking at Bitcoin, we dipped underneath support last night for a little swing failure pattern. Only moved up higher since then. We have resistance at the 200-day moving average, and as well as the previous daily close, which was right around 17K, 17.1. Looks like we have this little RSI trend here. Of course, if it breaks down, then I'm expecting something like that. But if we can continue to hold this and end up moving higher, then Bitcoin's probably good to tag 17.1, maybe as high as 17.15. And then that's maybe where you end up looking for shorts, or you end up closing your trade and waiting for CPI to come in. So, these wicks, this rejection going into tomorrow, again, I have to preface, typically I'm on the ball. I know what's going on, but, this is very, very difficult and confusing market structure. So just based on what we're looking at now, if we can hold above the VWAP, I would say 17.1, 17.15 likely. If we can't hold above the VWAP, then we're probably stalling at 1705 and then dropping back down to the lower end of the channel. And of course, if we end up surviving this level, ping-ponging around, then that's a really good launch level to head up to 17.2, 17.3, potentially 17.4. And then, of course, if we firmly break 16.9, then you're back to 16.8, 16.7 rather quickly. And last time CPI was positive, I'm just going to go ahead and draw what that wick or what that candle would look like in terms of a 10% move. So we're right here, 10% for Bitcoin would be all the way up to nearly 19K. And then 10% down for Bitcoin would be right around 15K. So depending on, of course, this is just because I'm using 10K because that's the candle that we got last CPI, and look what happened, before CPI as well. We had a big dump and then it just continued to zoom higher before, and then of course, after Jerome Powell spoke, we just crapped lower back towards where we were previously. So if you think that CPI is going to be beat just following that general market structure, we have a massive candle higher, and then we end up just right back lower. And then maybe we end up holding this to head higher, or then maybe we end up heading lower, depending on where FOMC is and outlook. And then, of course, on the opposite direction, we could just completely fall flat and then have a massive rise back to where we are. So, there's a million and one things that can happen. Personally, I think CPI will probably end up being a beat. We've seen a lot of relaxation in terms of inflation prices, oil and gas being the one, energy, in that umbrella. We've seen housing come down a bit. Food has not really come down, but it has stopped growing. So there's a couple of signs, that we're looking at right now. And of course, sentiment is still bearish. And I think, you have a very weird scenario in which you have a CPI on one side and then again going straight into FOMC. So that's why I'm expecting, if we do get a boost, I would expect that to probably be sold off, especially if we are getting a rate hike. I don't see rate hikes as bullish unless it comes in lower than anticipated. And then is it still really bullish at that point? So, very tough sledding moving in here. And what I would do is trade, short-term scalps, take your directional bets, in a very short and quick fashions. And then depending on what Jerome Powell says tomorrow, then you probably have a fantastic swing trade in front of you. So looking at Ethereum, very similar. We had a bit of a steeper swing failure pattern lower. Many thought, we may end up heading down, very similar to Bitcoin, RSI trend holding up, but we've got this downtrend holding up very similar to equities as well. So if it does get up here, tough to break that. But if it does, that'll be our catalyst for potential long. So if it does get up to that RSI level, I would say that pretty much matches right here with 1260. Told the trade the chain community that was likely this morning as long as equities behaved. If we get up to 1260, you obviously have to flip 1260 to support to be able to head up to 1280. And then, of course, you could get rejected at 1260 straight back down to where we are now, which is 1255, and then either head higher or head lower for a double bottom or failure of the previous level. So that's pretty much how we're looking for crypto and equities. I wish I had a more definitive answer for you. If I had to guess, we probably had higher, at least into the close. We have some volatility. Maybe we had a little bit higher into CPI print. If it's good, if we head higher. If it's bad, we head lower. And then, of course, we will have Jerome Powell speaking Wednesday after the rate hike, or the likely rate hike, I should say, which will end up bringing more volatility, and we'll discuss that tomorrow. But given that CPI is very early in the morning and we don't have Jerome Powell speaking till Wednesday, I would expect to see, continued momentum at least into the close on Wednesday, or on Tuesday for CPI, because we don't have a conversation. We don't have Jerome Powell. We just have the data. So if the data is good, it should drive momentum for a full trading day. If the data is bad, it should also still drive momentum for a full trading day. So that's the current outlook. I wish I had more specificity for you, but sometimes there is no black and white in the market. Actually, pretty much every day there is no black and white in the markets, and we have to wait to come in and see if our theses end up holding true. So good luck, happy trading. Look out for that data very early in the morning. If you want to place a trade beforehand, good luck, Godspeed. I'm rooting for you. And if you want to play a little bit smart, wait for the data to come in, play the momentum, and then wait for a stall and then play the reverse, because we likely know that a rate hike is coming on Wednesday. And I don't think that unless we have an insanely low CPI print, that the Fed is going to back off from a 50-point basis hike. So good luck, happy trading. See everybody tomorrow. If you're not in the Trade the Chain community, that's where all the good stuff is happening this week and always. So have a great day, everybody.